You've heard a lot of talk about the new 15% global minimum tax that the world is trying to roll out, and now the United States has its own version. I'm going to tell you what's happening and what it means. So for a while now, you've seen a lot in the news about the world's proposed 15% global minimum tax, basically going after big companies that do business all over the world and forcing them to pay at least 15%. The goal would be to stop letting those companies send money to places like the British Virgin Islands, the Cayman Islands, other places in the world that allow them to actually be competitive. Countries that have said, hey, we don't need you to pay a lot of tax. Come here and use our banks. Come here and use our corporate secretaries. Come here and bring economic activity to our jurisdiction. We want you to come, and in exchange, we are going to give you very light tax treatment. Of course, the high tax countries of the world don't like that, and so they all got together and finally hammered out an agreement to tax all these big companies at 15%. Now, if you run a company that makes a couple $1 million a year, this does not affect you, at least yet. But the United States is now rolling out its own version in its new climate and inflation bill. And so let's talk about what that's going to include for Americans. If it's your first time here, I'm Andrew Henderson, founder of Nomad Capitalist. We're a boutique consulting firm that helps 7- and 8-figure entrepreneurs who want to legally reduce their taxes, who want to diversify and protect their assets, who want to get second passports and protect their freedom. You can learn more at nomadcapitalist.com. And so it is the folks that we work with who are getting attacked by high tax rates in the Western world. I can tell you, if you run a 7- and 8-figure business in a country like the United States, you are not getting away with paying 0% tax in almost any circumstance. You are paying a lot. And so there's a lot of misinformation out there where the average voter thinks like, hey, these 7- and 8-figure entrepreneurs Nomad Capitalist is helping. What do they need to lower their taxes for? Well, because a lot of people we talk to are paying 30, 40, 50%, and even more in some cases. These smaller businesses are paying plenty of tax. So let's talk about what's happening. The United States has this tax, climate, and energy bill that they are putting out there. And one of the tax increases, one of the tax changes, is a 15% minimum tax, which is, you would think, going to be something similar to what's going on in the rest of the world. Because all the countries in the world, they agreed at the international level that they're going to roll out this new 15% tax. They agreed to all the different provisions. It took them a while to hammer it out. And you may remember last year, countries like Ireland, we're not interested. And then they eventually came around. And even now in the European Union, Hungary's like, we don't want to get on board with that. And so it took a long time to get everybody on board with this. But now they need to go back and they need to get actual, national legislators to put this into action, which is why Hungary is gumming up the works. The U.S. is gumming up the works. Kirsten Sinema, who I actually presided over an interview with, the host is going to be at Nomad Capitalist Live this year. When she came into the studio back in 2004 and said, "What's wrong with communism?" I was literally standing right there in the radio station when she said that. Apparently, she has changed her ways. And Joe Manchin, they're potentially holding this up, but they think they have the votes, 50 votes in the Senate to pass this new bill that would roll out 15%. So all right, let's get into it. How would this work? Basically, in the United States, any company with $1 billion or more in income would be required to calculate their tax liability in two ways. Number one, the way that the IRS allows you to do it, which is you throw all your deductions at it, all the credits, all the whatever, that reduces that $1 billion to a lower level. Okay, that's what you currently pay if you're a U.S. corporation. You pay 21% on that. And so the effective rate, when you're taking all the different incentives or when you're writing stuff off, can be very low. And so Joe Biden had complained that a whole 55 companies, according to Bloomberg, weren't paying any taxes by being profitable. 55 whole companies. Let's devote all of our efforts to solving that problem. Let's have a whole international escapade because 55 companies aren't paying something, even though they're paying a lot of taxes in payroll and sales and all kinds of other things. They're generating tremendous economic activity, but we got to change the whole world for 55 companies. But basically right now, they're figuring out, hey, we made $1 billion in profits, but after this, that, and the other, we're down to 100 million, 21%. Here's your $21 million on $1 billion. People don't like that, including, interestingly enough, people who paid $21 in taxes. They think 21 million is not enough, but that's fine. The new method that you're going to also have to calculate is, hey, you reported to your shareholders the book value. You made $1 billion, and so 15% of $1 billion is 150 million. Which one's bigger, 21 or 150? 150. So you're paying the bigger one. And so that's what companies are going to be required to do. And so book value, as described by Bloomberg, sticks more closely to generally accepted accounting principles or GAAP the IRS, of course, has all these so-called loopholes that people are allowed to use. And so why are they doing this? They're doing this because they have, even the Democrats, have people who don't want to sign on to a higher rate. Remember, Joe Biden wanted to raise the corporate tax rate back to 28, and then he had talked about back to 26.5%. It had been even higher, it had been in the 30s. The Tax Reform Act in 2017 brought it down to 21%. Introduced some other things, but brought it down to 21%. And so Joe Biden wanted to put it back up. But people in his own ranks were saying, like, no, we don't want to raise taxes. We don't want to do that. And so the margins in the Senate are so razor thin, they're like, well, we got to get everybody on board or else we can't pass this thing. So the idea was, hey, we're not raising taxes. We're just forcing companies to pay their fair share, which is their favorite thing to say. Everyone has to pay their fair share. 3 out of 5 Americans paid 0 federal income tax last year, but everyone else needs to pay their fair share. And so this is like closing a loophole. It plays well with the base, and we've talked about how in the Western world, the worst thing you can do these days is be successful, and you're always going to be seen as not paying your fair share. I don't live in the United States anymore, haven't for years. I haven't been a citizen for years, and people still come in the comment section, this guy should be paying more money to the U.S. He's a jerk. I don't even drive on a single road, use a single school. I don't use anything, and I'm a jerk for not paying taxes to the United States. And so politically, it's expedient. It plays well. We're cracking down on corporations, and we're not raising the tax rate. And so that's the deal. Now, here's the rub. You would think like, oh, okay, this is what the U.S. is doing to contribute to, their part of this new 15% global minimum tax. But alas, you'd be wrong. And so it's actually not even meeting a lot of the provisions that were set up. And so therefore, this is kind of like the U.S. going it alone and basically saying, hey, world, we're not really signing on to your whole deal. What's going to happen with that when the rest of the world gets on this system? Well, different countries in Europe have threatened retaliation because obviously a lot of these countries are companies in the U.S., the tech companies, are the ones that Europe is frustrated with. And they've rolled out different kind of sales taxes, digital service taxes to try and capture more revenue from these companies. And so if the U.S. doesn't sign on to the full version of this new global minimum tax, that is really not going to help companies. And so this is something that you see a lot of times with the United States, even as an individual. Because the U.S. has individual citizenship-based taxation, there are people who, for example, live in Canada. They're U.S. citizens. They live in Canada. And they pay taxes in Canada. Not exactly a tax haven up there. And yet, because the U.S. tax code doesn't really overlap with that many other tax codes, because it is so confusing and so complicated, and they follow you to the ends of the earth just for being their citizen, even though you pay taxes somewhere else, hey, sure, you paid taxes in Canada, and you don't have to pay twice, but there's certain things where it's like, oh, we don't like that investment, so we're going to tax that separately, sorry. And people have to, whether they're living in Canada, the UK, other places, people who are already paying high taxes have to do disadvantageous things at times to lower their taxes, which is why when we're talking to Americans, it's often easiest just to go to a place that doesn't tax you at all, because then all you have to do is worry about getting the US part down, and if you run a business, you can reduce your taxes to anywhere from 0 to low double digits, depending on your situation in most cases. Not giving you tax advice, just saying that's generally what we see. And so, obviously, most of us don't have companies that have $1 billion coming in the door every year. However, inflation is 9 point something percent. I mean, maybe we'll all get there eventually. And certainly what you've seen with, they're kind of calling this like a corporate alternative minimum tax, an AMT. The personal AMT, when they brought it out, many years ago, was never indexed to inflation, and it was designed to catch all the fat cats, and then eventually it just became like literally normal people. It became like you're living in New York City and you're barely getting by, and you're subject to this on the personal level. So what's to say that either this just gets set up in the same way, or what's to say that, hey, once we're in the door, $1 billion becomes 100 million, 100 million becomes 50, inflation kicks in, and suddenly a lot of just everyday business people, as much as that seems like a lot of money, there's plenty of regular businesses that you've never heard of, run by people that you see at your Starbucks who are wearing jeans and a t-shirt on a Saturday, that make some 8-figure amount of profit every year. It's not insane. It's obviously not a lot of people doing that, but it's not insane. And so the concern here is if you run a business in the United States, you're not even getting aligned with this new way that the world works. And so, sure, again, if you don't run a $1 billion company, this won't affect you, at least initially. But the trajectory is we don't really care about aligning our tax code. We've seen that for years, again, with the way that the U.S. sets up its tax code to be different and to disadvantage people who live overseas. Now they're going to disadvantage companies, perhaps, who are doing business all around the world. And so, sure, a lot of companies want to sell in the United States. They want to be based in the United States. And if you have a billion-dollar company, maybe there's more argument for that to be in the U.S. than for you. If you run a company that makes $5 million, there's really no reason for you to be in the U.S. You're paying a lot of money for not a lot in return. And so you're not going to get stuck with this for now. But what happens when the tax code and the culture of having the tax code just not match up with other countries and causing you to constantly have things being at odds? That's a general problem that this is simply reflecting. So it'll be interesting to see what rolls out of this. But what I can tell you is, for everyone who's concerned about, hey, there's no need to go offshore anymore because there's really no benefit, there's going to be this new minimum tax, they are targeting larger companies. If you just have a regular, everyday 7 or 8 figure business, you will still be able to go offshore and enjoy rates as low as 0%. And so I suggest, if you have the opportunity to do that, you do that. You put more money back in your coffers, you give yourself a competitive advantage, and you go where you're treated best while you still can.